Okay, good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. I've got Mike Traeger and Michael Bishop. Michael Bishop is at a Christmas party, an early Christmas party over there in Austria. And Mike Traeger is in the process of moving in Dallas, Texas. So I'm going to hold down the fort today, all by my little lonesome. But hey, we've done it before. We can do it again. And I want to welcome everybody to today's webinar. Very interesting going on in the markets this week as we finish up 2017. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. It's a little bit about me. Most of you know who I am. But if you're watching this as a video on the YouTube channel, gives you a little bit about me. Stephen Burns got a real presence on Twitter, good trader. But he says he said something this week that I just kind of, that really makes a lot of sense. Focus on signals, tune out the noise. There can be a lot of noise going on around us as we try to trade. It could be the noise of family, friends, naysayers, mockers, scoffers. It can also be the noise of, hey, I'm working for a living, so I don't have a lot of time to spend looking for things to do in the market. It can be the noise of just the financial networks. Boy, we know those are noisy enough. So if you are a technical trader, it's basically just we hone in on the signals. What are the charts telling us? What are the signals our system tells us to trade? That's what we focus on and try to get the emotions out of the way. Our objective of today's session and every Friday session is to take a look at timely and actionable intel review at the end of the week. Did we have anything going at the beginning of the week that we reported on, and then we added to maybe open a position going into the week. Market review, stocks and ETF performance, bonus trades if we have any. I've got a couple that I'm going to highlight. They're not ready to be traded yet, but as I have promised, I am going to provide at least 10 to 12 bonus trades and bonus setups to both active trend traders, both the premium and the non-premium members. But you have to be an active trend trader member if you want to get notification on these bonus trades, and we'll talk about how to do that shortly. So let's take a look at where we're at. Well, for the year, as of December 8th, and we're closing down, we've got, there's like 14 trading days left in the year of in this year after the day's over. 14 trading days, and then 2017 will be a vapor. It will just be a memory in the past. Hope that from a lot of the emails I've been getting from folks are saying that, hey, 2017 has been a very good year for them. A lot of emails saying that they are so thankful for the active trend trading system because it's helping them to make money where they weren't able to make money in past years. So I'm thankful, and I always like it to hear it when our members are successful. So here's where we're sitting as of about 9 o'clock this morning. We're up about 45% in the active trend trading system. And then here's how it compares with the rest of the markets. As you can see, hey, NASDAQ's been kicking butt this year. NASDAQ and NASDAQ Composite up 30% for the year. This has been a highly unusual post-election in a market in that it's been a lot stronger than we anticipate, and there's not been the big sell-off at the end of the year like the seasonality charts lead us to believe that's what's going to happen towards the end of the year. But so, I mean, in that way, that's a good thing. I just posted on Twitter a article that was in the IBD newspaper about is the timing of the tax breaks that are coming, is it such that is just at the right time to provide further fuel to push to spur the economy back into what it was prior to the last 8 years? In other words, the recovery of the last 8 years, I mean, well, actually the 8 years prior to Trump becoming president, was basically anemic. It was one of the slowest recoveries and underperforming recoveries that has been in place. But with a lot of things that have happened in the past year, they basically have spurred the economy onward. And will that continue? We shall see. But let's take a look at some charts, because the charts always give us a picture of where things are at. Okay, let's take a look at SPX. Left-hand chart is a daily, right-hand chart is a weekly. We last week drew this, we had drawn in this little channel line. Price action on the S&P had broken above the channel line. Of course, this is going to slow down on me with the bandwidth, but it had broken above this channel line, as we see here. So it had broken above this channel line about a week and a half ago. Spent a couple of days above it, started showing some flakiness, and then on Monday we get a big gap up and then a sell-off. Very bearish type of signal. Turned into a bearish engulfing candle of this day here. And then that was then followed by a crossover on the TSI to the downside. Again, a bearish signal. Now what are we getting? We're getting a retest back up into the highs. We don't know if it's going to break through this level here or just get up there and bounce and then pull back. A lot of the technicians out there would like to see us get a little bit more of a significant pullback, because right now the pullbacks have been very, short, shallow on the S&P and on the other indexes also. So let's get rid of that. Do I have? Yeah, I do have it now. Okay, so we got a real quick pullback into the 8-day moving average reversed, and now it's popping back up to its highs. If things continue the way they are, we may get a negative divergence, but not so on the intraday or the weekly charts. TSI is pushing on to new highs, but it is towards the level where it tends to, if it's going to turn around, tends to turn around. It is very extended, as we see looking back over the years, even back into 2014. We're above 2014 levels, pushed through the 2017, earlier 2017 level. And what kind of candlestick are we putting in for the week right now? Right as of right now, if we close right where we're at, we will have put in a hanging man, which is a bearish reversal candle, saying that we may have topped out and we'll be pushing, and we're not going to say that we're going to push down dramatically, but we may push back down into the moving average, which is about the 8-week moving average, 8 to 10-week moving average, which equates to approximately the 50-day moving average. So that's what's going on with the S&P. NASDAQ actually gave us a nice little bounce off of this support here at the 6230-ish level, which is just above the 50-day moving average. It too bounced up. From a longer perspective, or maybe a rally into the end of the year, I kind of like this one better. TSI has rolled up and crossed. Unfortunately, we're getting a conflicting signal on the weekly TSI because it's rolled over and crossed also, and we have what could be considered, not quite a hanging man last week, but we certainly a dark cloud cover, which is a bearish candle. This week we're getting a hanging man of sorts, and also just keep in mind, it doesn't have to work out this week or next week. It'd be cool if we rallied into the end of the year and into the first part of January, and then things fell apart and we went into a better correction that would help us reset some of these things. But what we had also going on was this signal, this upward pointing wedge on a weekly chart. It broke above that And again, when it breaks above a channel line, oftentimes that's a sign that, hey, it's not going to go too much further. Or if it accelerates even higher, that's a sign that, hey, this could be an exhaustion type thing. So we're getting back. I pull back into the level, bounce, back in the level, bounce, 2 weeks in a row. But this entity, this upward pointing channel or upward pointing pennant type is a bearish signal. Will it fulfill? We shall see. As we've seen on the market, and going back, oh gosh, for the last, I want to say the last 4 or 5 years, we've been occasionally getting these bearish type patterns. They would start to fulfill and then snap. It would, basically the market would kick back in and the rally would be off and running again. So Russell, again. So as of right now, I like Russell. I like NASDAQ for the potential of a run into the end of the year, a stronger run than the S&P. Could be wrong, but the charts kind of look like, hey, this could be a good turn. Russell, the reason why, hey, we're getting a bounce off. The TSI did pull back into the 0 line, which is a good level of support, and appears to be bouncing. Not running away dramatically, but it is appearing to be bouncing. So we may get a little bit of another retest back into this level of support, even back down to the 1510 level, and then a bounce. Clearly, on a weekly chart, we are getting negative divergence, and that negative divergence, of course, is more or less on a weekly chart, has kind of longer term emphasis, and what we could be seeing from that is that we could push higher, but the negativity here is saying the momentum is not in the move like it was before, and therefore when it does do a correction, the correction would be more severe. And but if Mike Traeger was here tonight, he would say he's been expecting this to happen for not just days, months, but several years now. And the bearish signals have turned out to be, some of them have turned out to be okay pullbacks, but by and large, they've been just opportunities to go ahead and get long. And if the tax thing does work out the way some people are anticipating, could be very interesting. Are the conditions right? And plus, because the recovery during the Obama years was so anemic, could it possibly be that this bull market, could in fact get additional legs and continue to run even harder and with more upside velocity than previously anticipated? So we'll leave that there. And those are just kind of questions I walk into this weekend asking, and also questions as I look towards what's going on in for going into 2018. Sorry about that. I was multitasking. When you multitask, sometimes things don't work right. So here's where we're sitting. Seasonality. We will be doing a review of seasonality towards the end of the year to say, okay, here's what this year looked like. Now, what do we anticipate for next year? Seasonality basically has worked, but we may find ourselves around this position of the second arrow on the NASDAQ and on the Russell around the place of this second arrow where we've gotten a pullback, and where we're going to get a little bit of a afterburner boost to take us to the new highs going into the end of the year. We shall see. One of the things that has been very successful for the active trend trading system going through this year has been this concept of seasonality and a focus simply on a few. 7 ETFs. 3 of them being market index ETFs, and then 4 of them being 2 commodities, 2 industry groups, and that has worked out exceptionally well because oftentimes we don't have time to go searching for all kinds of different stocks, and those 7 ETFs have performed exceptionally well, and they put in great patterns. And that's one of the things I'm writing in my journal, is going into 2018, I want to be more focused on those, so we don't miss as many of the trade opportunities in the set-aside watch list that we're, the condensed watch list that we're looking of the ETFs and, maybe NVDA, Tesla, Netflix, so we don't miss those triggers, because those ones tend to be quite large and quite significant. I had one of our members, wrote me an email today, thanking, saying, hey, had a great year, made some money, but he asked me about Dust, D-U-S-T, and you know what? Dust several months ago put in a bottom, which turns out, if we would have seen it, would have led into a very excellent trade. So here's where we're sitting. And again, next year, what I want to be working on and going into the year is just bringing this strategy number 1 more in line with at least strategy number 2. And of course, strategy 3 is always going to probably outperform, just simply because of what it is. Speaking of that, please write this down in your calendar. If you are a premium member, active trend trading member, on the 30th of December, I will have a special training session. It's probably going to be about 3 hours worth of training on how to set up your leaps for strategy number 3, to do those, supercharged, more or less supercharged covered calls, sell weekly premium against it, because that is, again, continues to be a very successful product. And I'm working with somebody to see, for non-members, to be able to provide the training for them. But what's the proper, for premium members, it's free training. Okay, it's part of your membership. But for those who are not, premium members, but who would like to be trading strategy number 3, what appropriate, fee would be to attend the 3-hour training session on a Saturday morning. So let's move ahead here. Okay. Active trend trading system. Our motto is clarify, simplify, multiply. We focus on the 5 pillars of active trend trading. We focus on what to trade, and we share it with the members what to trade. And it's typically top quality IBD growth stocks and top-notch ETFs. When to enter, when to exit, what strategy we're going to use, and what to expect. Those are the 5 pillars. This week, what am I looking at? Well, 1, I got to be ready for the year-end surge after the Fed meeting. The Fed meets this week. So we'll watch, see what happens with the Fed. All the expectation is the Fed is going to raise rates. The economy is recovering really well, and so it is anticipated that rates are going to go up. I think between the tax deal, where the taxes are going to corporate taxes are going to possibly go down and help out the small businesses, that may be offsetting the increase in interest rates, so that the IWM, the Russells, the small caps will not be as impacted by an increase in the Fed rate. As I identified earlier, IWM, QQQ are the ones of the index ETFs I like best. Bonus trades, if you were in on the play trade, we got in on 1013. We held that for almost 60 plus days. We closed out with a little bit over an 8% gain, but that was taking 3 different positions off the table. We made $1,700 on that one. When will the training be for premium members? Sorry, I missed. It will be on December 30th, Andrew, because I want to get it out there before we go into the beginning of the year, because we'll be opening the positions, we'll be opening the leaps positions the first week in January. Okay, strategy. I'm still watching Netflix, Tesla, NVDA, YY, Catfield specials. And I'll go over those really quickly before These are, like I said, they're not ready yet, but they're getting close. So refinements for each train going into 2018, which we have been working on, and training December 30th on setting up strategy 3. New composite watch list for for active trend tradings. Our first one was posted this past weekend. I hope that you, and it's posted to the On the Radar tab on the website. And then early warning alert updates and new memberships. So we want to encourage that you can join both either early warning alerts and active trend trading, or both, and right now get them at a discounted rate. Here's one of the things that I think is a real big benefit for the premium members is, one, I do a what's called a go no go table, and I cover it for strategy 1, strategy 2 primarily, but during September focus on swing trades and trend trading. But this is setups as of December 3rd. This is for this last week, and I want to highlight a couple of items. One, Netflix. This came out on Monday morning or Monday afternoon, and then I highlighted 4 entities. Notice there was no trigger on any of these, but I just basically say, okay, Netflix, support at 180, waiting for daily TSI to turn. Daily TSI in downtrend, but price at 300 support. We're going to see what happened with each one of these. And then YY, close to a daily TSI setup. And so even if I miss sending out an alert to say, hey, let's get into Tesla, or let's get into Netflix, you and your analysis, if you're a premium members, can look at this and say, hey, I want to trade this, this, and this. Now, what would have happened if you would have traded those 3 stocks? We'll take a look at that. So here's what we've done bonus trade so far for the year. Again, I'm very pleased with that. Again, 10 to 12 per year, and that's for all active trend trading members, premium and non-premium. But you got to be on the active trading mailing list. You find that by just going to this AWeber form right here, and it'll let you sign up for that. And here's a reminder that, end of year special, we are going to be doing the end of year special. Got off that really quickly. And anything that says sign up or membership on the website now is connected to this, to 2 discounts going. 40% savings on, off of $74.99, our regular active trend trading. That entitles you to all 3 active trend trading strategies, strategies 1, 2, and 3. Or a lot of people double up on this, and they take this one also, early warning alerts. There's a new video out on that. There's also a new video I did just this week on how to manage the early morning alerts, but half price off the $500 per year amount, $249. So you can find that at this site, or just go to any of the things on the website that say, excuse me, that do say membership. So just remember, keep the egg growing, trade wisely, trade profitably. For those who are standing by, we will do the premium members next during the final hour. And we're doing pretty good. So I'm going to go back and I'm going to go over these entities that I talked about. Okay, first, hold on, please. Okay, first, let's go take a look at the potential, what do I call these? The potential catfish specials. I'm liking NCR. Okay, NCR. Here's the weekly on NCR. Here's the daily. I'm going to go over to the daily, weekly, monthly to show you another. It gives a better picture of why I like it. One is I have the weekly TSI down here at the lower level. Looks like it wants to roll around. Yes, I do have a trend line. Those of you who were on the training session on Wednesday night We want to keep an eye on that trend line because it could basically act as a resistance. But we've had 1, 2, 3 moves up, or moves up towards the trend line. Oftentimes that third one is the reversal. So when it pulls back into around the 30 level, that would give us our opportunity. So I'm looking at that for potential. Looks like it is in sync with the monthly, which that's cool. We realize we have a lot of months left to go, but that's one. BAT. That's BAT is 2. Again, it's in longer term, it's in a nice uptrend, and basically we're just doing a pullback into a past level of support. And if this, in fact, look at the buyers have started coming back in, and if we get a trigger out of here, if it runs back up to the top of where it's at over the next few weeks and months, looking at about a 40% gain. It may do a run into earnings, which is 2/22/18. Now let's take a real quick look at those other ones where we highlighted. We highlighted Netflix early in the week, and we said basically here was Monday, okay, 2/4, and I said, Netflix is bouncing off the 180 level. Well, sure enough, it bounced there, went down and tried to do a little bit of a retest on Tuesday. But by that time, the TSI had started to bottom and started to roll up. So I'm liking Netflix longer term, and the premium members will be looking to trade this via either one of 3 aspects, well, one of 2, either strategy 1 or 2, but we're looking for making Netflix a candidate for strategy 3 going into the next year. So if someone, this is what the premium members could have done. Hey, we basically had not an alert, but at least a notification that says, hey, 180 support. Hey, this might give me an opportunity to trade. Or I can say, well, I'm going to let it get to the top here, and because of the rest of what's going on, I'm going to trade it back to the downside. That's one choice. What was the other one? Tesla. Again, real good bounce on again, we identified on Monday that Tesla was finding support about at the 300 level. Puts in a bullish inverted hammer on Tuesday, and a real nice bullish move, bullish engulfing on Wednesday to pull on up right up to guess where? Downtrend and the upper resistance level, and it's reversed all off of that. So that's what I wanted to show you. That's a great, using that go, no-go table for premium members. A lot of good information is coming out on that document to help you be ready to trade, even if I'm, working on other things and unable to send out alerts. Hey, you know enough to be able to do your own alerts and say, hey, I'm getting this trade because this is a solid trade to the upside. But like I said, I've given, I'm providing that as part of, the premium membership. And why? I love YY in that on Monday we identified, hey, we are at a support level of about 100. And sure enough, we move up, off, down, continue to push down. 97.77 was the big line. We get a TSI tick up on this day, but we're right at support here, guys. And so and so that is one of the written rules, or one of the rules by the numbers for the active trend trading system, to be able to take a trade right there at that support level, and with the stop loss being just immediately right below it. So on Wednesday, it got as low as 98.50, and again, the support was at 97.77. Then it gaps up yesterday. So if one did take a trade, let's say at 100, okay, the next day it gaps up and runs up almost to 110. That's a 10% gain in a day. And that's what YY does for you. So, okay. Sorry, I've been a little bit verbose today, but I just wanted to share. I guess so much stuff to share. I'm really excited about moving into the new year. So, okay, premium members, next up, the final hour. And so until then, folks, until Monday, aloha, trade wisely, trade profitably. And again, remember to get registered as an active trend trading members to take advantage of those bonus trades. Aloha, everybody. Good day. Good day, traders. This is Dennis. During the month of December, the premium membership for the active trend traders is going to be offered at 40% off. It's a regular monthly membership amount, $44.99, and early warning alerts. You can jump on early warning alerts for $249, which is 50% off the regular yearly membership. So don't miss out on this opportunity. Aloha. God bless, everybody.